Welcome back. Today we begin a series of questions for Gleim&Wiley, Section D 2021 and 2022, Cost Management. At the end of the episode, a question is posed for solution. Please write the solution in the comment, and your answers will be followed up. We are waiting for any request from you related to the questions of the first part that you need. Please do not forget to support us by subscribing to the channel and liking the video. Let's start. Question 1. The Homewares Corporation makes cotton bath towels that sell for $25 each. The total cost in August of manufacturing 4,000 towels is $66,240. The variable cost for each towel is $6. What is the Homewares Corporation's fixed cost for the month? A. $33,760. B. $42,240. C. $24,000. D. $66,240. The answer is B. $42,240. Correct. The fixed cost equals the total cost of manufacturing minus the variable cost, therefore, the fixed cost equals $42,240, $66,240 minus 4,000 times $6. Question 2. Cupid Company manufactures dog toys. For 20x7 it had the following amounts related to its most popular toy, Bacon Ben, beginning finished goods inventory, $30,000, cost of goods manufactured $120,000, and cost of goods sold $100,000. What was the amount of ending finished goods inventory? A. $50,000. B. $10,000. C. $30,000. D. $20,000. The answer is A. $50,000. Cost of goods sold is defined as beginning finished goods inventory plus cost of goods manufactured minus ending finished goods inventory. Rearranging the figures results in ending finished goods inventory being calculated as beginning finished goods inventory plus cost of goods manufactured minus cost of goods sold. Using the amounts for Cupid results in ending finished goods inventory of $50,000, $30,000 plus $120,000 minus $100,000. Therefore, this is the correct answer. Question 3. Which amount of production and sales would produce a net income of $75,000 if the selling price is $125 per unit, the contribution ratio is 0.40, and total fixed expenses are $25,000? A. 2,000 units. B. 800 units. C. 1,500 units. D. 600 units. The answer is A. 2,000 units. Correct. With a contribution ratio of 0.40, the unit contribution margin is $50, 0.40 times $125. The quantity needed for the target income equals fixed cost plus target income, divided by unit contribution margin. Quantity needed equals $25,000 plus $75,000, divided by $50. Quantity needed equals 2,000 units. Question 4. Which one of the following refers to a cost that remains the same as the volume of activity decreases within the relevant range? A. Variable cost per unit. B. Total variable cost. C. Unit fixed cost. D. Average cost per unit. The answer is A. Variable cost per unit. Variable cost per unit remains the same as the volume of activity decreases within the relevant range. Question 5. All of the following statements describe complications in determining fixed, variable, and mixed costs except A. The distinction of cost behavior as variable or fixed is based on the cost object. B. Fixed costs can shift in total as the organization moves between significant cost structures. C. Costs in organizations are always either variable or fixed. D. In very short horizons most costs are fixed. In contrast, over very long horizons most costs are variable. The answer is C. Costs in organizations are always either variable or fixed. Correct. Many costs in organizations are not strictly variable or fixed but exhibit both variable and fixed characteristics. For most decisions, these mixed costs need to be split out into a variable cost component and a fixed cost component. It's usually not possible to precisely split a mixed cost into its variable cost and fixed cost components. The methods used to split out these costs provide at best an approximation. Question 6. The most important criterion in accurate cost allocations is A. Using multiple drivers for each cost pool. B. Using homogeneous cost pools. C. Using a simple allocation method. D. Allocating fixed and variable costs by using the same allocation base. The answer is B. Using homogeneous cost pools. The most important criterion in accurate cost allocations is through the use of homogeneous cost pools. Homogeneous cost pools are a group of overhead costs associated with activities that can utilize the same cost driver. Question 7. Which best describes costs that vary in total directly and proportionately with changes in the activity level? A. Fixed costs. B. Mixed costs. C. Semi-variable costs. D. Variable costs. The answer is D. Variable costs. Correct. The definition of a variable cost is one that varies in total proportionately with changes in the activity level. For example, if the activity level doubles, the variable cost should also double. Question 8. A company has the following information. Units produced and sold 15,000. Variable costs per unit $12. Fixed manufacturing expense $48,000. Fixed selling and administrative expenses $72,000. What selling price will result in operating income of $300,000? A. $20. B. $40. C. $28. D. $48. The answer is B. $40. Correct. Contribution margin minus fixed costs equals operating income. Contribution margin minus $48,000 minus $72,000 equals $300,000. Contribution margin equals $300,000 plus $48,000 plus $72,000. Contribution margin equals $420,000. Revenue minus variable costs equals contribution margin. Revenue minus 15,000 times $12 equals $420,000. Revenue equals $420,000 plus $180,000. Revenue equals $600,000. Selling price equals $600,000 divided by 15,000. Selling price equals $40. Question 9. A company has the following cost structure. How many units must be sold at $25 each to yield a contribution margin of $75,000? A. 6,250 units. B. 5,357 units. C. 4,412 units. D. 3,000 units. The answer is A. 6,250 units. Correct. Unit contribution margin is sales minus variable costs. Unit contribution margin equals $25 minus $2 minus $6 minus $3 minus $2. Unit contribution margin equals $12. Quantity necessary equals contribution margin desired divided by unit contribution margin. Quantity necessary equals $75,000 divided by $12. Quantity necessary equals 6,250 units. Question 10. Parker Company pays each member of its sales staff a salary as well as a commission on each unit sold. For the coming year, Parker plans to increase all salaries by 5% and to keep unchanged the commission paid on each unit sold. Because of increased demand, Parker expects the volume of sales to increase by 10%. How will the total salaries and commissions change for the coming year? A. Increase by more than 10%. B. Increase by 10%. C. Increase by 5% or less. D. Increase by more than 5% but less than 10%. The answer is D. Increase by more than 5% but less than 10%. The cost of salaries will increase by exactly 5%. The cost of commissions paid, a variable cost, will increase by the level of activity, which is 10%. Because total compensation is a blend of these two costs, total compensation will increase by some amount between 5% and 10%. Question 11. Huron Industries has recently developed two new products, a cleaning unit for laser discs and a tape duplicator for reproducing home movies taken with a video camera. However, Huron has only enough plant capacity to introduce one of these products during the current year. The company controller has gathered the following data to assist management in deciding which product should be selected for production. Huron's fixed overhead includes rent and utilities, equipment depreciation, and supervisory salaries. Selling and administrative expenses are not allocated to products. For Huron's tape duplicator, the unit costs for raw materials, machining, and assembly represent A. Prime costs, B. Common costs, C. Conversion costs, D. Committed costs. The answer is A. Prime costs. Following generally accepted accounting principles, GAAP, product costs consist of direct material, direct labor, and indirect manufacturing costs, overhead. Prime costs are defined as direct material plus direct labor. Question 12. Jacques has been asked to calculate the cost of goods manufactured for Sully Enterprises for fiscal year 20/7. He has accumulated the following values. Beginning work in process inventory, $45,681. Ending work in process inventory, $55,374. Beginning raw materials inventory, $94,782. Ending raw materials inventory, $85,377. Raw materials purchased, $1,487,237. Delivery vehicle purchased, $28,649. 282,100 man-hours of factory labor at $21.50 per hour. 18,600 man-hours of factory oversight labor at $32.40 per hour. Administrative salaries, $495,000. Factory utilities, $22,300. Factory depreciation, $12,400. Factory repairs, $64,450. What value should Jacques find for the cost of goods manufactured? A. $8,777,538. B. $8,282,538. C. $7,651,249. D. $8,253,889. The answer is D. $8,253,889. Cost of goods manufactured equals beginning work in process inventory plus manufacturing costs incurred during the period minus ending work in process inventory. Manufacturing costs incurred during the period equals direct materials plus direct labor plus manufacturing overhead. Direct materials used during 20 times 7 is equal to beginning raw materials plus raw materials purchased minus ending raw materials, or $94,782 plus $1,487,237 minus $85,377, equals $1,496,642. Direct labor for 20 times 7 is equal to 282,100 hours times $21.50 per hour equals $6,065,150. Manufacturing overhead consists of manufacturing costs other than direct materials and direct labor. For Jacques, manufacturing overhead in 20 times 7 is equal to factory oversight of $602,640 plus factory utilities of $22,300 plus factory depreciation of $12,400 plus factory repairs of $64,450 equals $701,790. The total manufacturing costs for 20 by 7 are $1,496,642 plus $6,065,150 plus $701,790 equals $8,263,582. Putting this into the cost of goods manufactured formula results in cost of goods manufactured of $8,253,889. $45,681 plus $8,263,582 minus $55,374. Therefore, this is the correct answer. Question 13. Royalty Manufacturing has accumulated the following cost information related to the production and sale of 6,000 units of product #35BR. Calculate royalties contribution margin related to product #35BR. A. $51,000. B. $78,000. C. $60,000. D. $1,000. The answer is C. $60,000. Correct. Contribution margin is sales minus variable costs, which includes direct materials, direct labor, variable manufacturing overhead, and variable selling and administrative costs. Contribution margin equals $6,000 times $28.50 minus $25,000 plus $9 times $4,500 plus $25,000 times 110% plus $3 times $6,000. Contribution margin equals $171,000 minus $111,000. Contribution margin equals $60,000. X $51,000. Incorrect. This amount is the gross margin using full costing. Fixed costs are not included in the calculation of contribution margin. All variable costs, including variable selling and administrative expenses, are included in the calculation of contribution margin. X $78,000. Incorrect. This amount is the gross profit using variable costing. All variable costs, including variable selling and administrative expenses, are included in the calculation of contribution margin. X $1,000. Incorrect. This amount is the net income. Fixed costs, including fixed manufacturing overhead and fixed selling and administrative expenses, are not included in the calculation of contribution margin. All variable costs, including variable selling and administrative expenses, are included in the calculation of contribution margin. Question 14, Gleam. If the beginning balance for May of the materials inventory account was $27,500, the ending balance for May is $28,750, and $128,900 of materials were used during the month. The materials purchased during the month cost A. $101,400, B. $127,650, C. $130,150, D. $157,650. The answer is C. $130,150. Purchases equals usage adjusted for the inventory change. Hence, purchases equals $130,150, $128,900 used, $27,500 BI plus $28,750 EI. Question 15, Gleam. The profit and loss statement of Maidengrad Mining includes the following information. For the current fiscal year, sales $160,000. Gross profit $48,000. Year-end finished goods inventory $58,300. Opening finished goods inventory $60,190. The cost of goods manufactured by Maidengrad for the current fiscal year is A. $46,110, B. $49,890, C. $110,110, D. $113,890. The answer is C. $110,110. Maidengrad's cost of goods manufactured can be calculated as follows. Question 16, Gleam. MadTag companies beginning and ending inventories for the month of November are. Production data for the month of November follows. MadTag uses one overhead control account and charges overhead to production at 70% of direct labor cost. The company does not formally recognize over or under applied overhead until year-end. MadTag company's prime cost for November is A. $370,000, B. $168,000, C. $363,000, D. $170,000. The answer is A. $370,000. Prime costs are the combined costs of direct materials and direct labor. Question 17, Gleam. Refers to question 16. MadTag company's total manufacturing cost for November is A. $502,000, B. $503,000, C. $363,000, D. $510,000. The answer is D. $510,000. Total manufacturing cost is the sum of direct materials cost, direct labor cost, and manufacturing overhead. Question 18, Gleam. Refers to question 16. MadTac Company's cost of goods transferred to finished goods inventory for November is A. $469,000, B. $477,000, C. $495,000, D. $484,000. The answer is D. $484,000. This solution requires a series of computations. Total manufacturing cost is the sum of direct materials cost, direct labor cost, and manufacturing overhead. Question 19, Gleim, refers to question 16. MadTac Company's cost of goods sold for November is A. $484,000, B. $491,000, C. $502,000, D. $476,000. The answer is B. $491,000. This solution requires a series of computations. Total manufacturing cost is the sum of direct materials cost, direct labor cost, and manufacturing overhead. Question 20. Given the following data for Scurry Company, what is the cost of goods sold? Beginning inventory of finished goods $100,000. Cost of goods manufactured $700,000. Ending inventory of finished goods $200,000. Beginning work in process inventory $300,000. Ending work in process inventory $50,000. A. $500,000. B. $600,000. C. $800,000. D. $950,000. Choose the correct answer and write the answer in the comment. The solution will be discussed in the next episode before starting the questions related to the section.